gap open up, Nasdaq comp time 6:04 a.m. Pacific Standard Time, date 9/14/2011. And here we are gathered again during a monthly options expiration week. And it's Wednesday, and we're halfway through it. Today, during the mid part of the session, we'll be halfway through the 5-day period. Within the actual structure of the price action in the puts, the calls, the equity, and everything that it would take to know how to trade a monthly, weekly options expiration. And why is it so valuable and profitable, both in volatility upside gaps and downside volatility gaps? What we are time stamping is that the amount of gap ups, 1.00 ratio qualifier, is very diminishing. Yes, you do have some of them, but when we were in much higher volatility, we used to have a list way down here. Go look on stockmarketpunding.com at other pre-market futures updates. Okay, stocks are going to have more of a challenging price. The higher that you go up in the delta, the higher the delta prices in the bull run here, is that they're going to be very challenging at those prices. You're going to be looking for an immediate weakness in price, closing below the half bar, seeing how the diamonds are lower in price action. When they bounce up in volatility to the half bar, but then there's an immediate red sell bar, and that the sell bars in the teeny increment lines are exactly two of those. And that when you start to see that kind of action, that means that stocks would be confirming that, wait a minute, I'm having a little bit of problem here at my upper higher delta line in your market maker MMT assigned application that you use. And that when you get up to those higher positive deltas, the higher they are, the weaker the price action will start to build. And once again, last week, a weekly expiration, they got killed. But this is a monthly. It's the third Friday coming up. And it's the traditional monthly. I'm going to show the gap open down. And I want you to see here too, you do not have anything that qualifies at 1.00 ratio gap open down. Before, you may have a list that is so long when the higher volatility was here, but right now, you're not. And you're not getting an extreme gap up list on the other hand either, though, where this list you would like to see a very long expansionary gap list than a diminishing 1.00 qualifier, diminishing name gap list. This is how we know that the volatility isn't quite as high. But once again, we also know, because of this change that we're witnessing in the diminishing gap open up list, is that stocks are going to hit their upper price levels. Google's up $3, and we bought these calls. Look at all them Google trades we've done all week with our MMTs. We own these 520s right here. We're going to be watching how they take out all that premium of that 530 put. We're also going to be watching that 535 put. It's here. It's now. They're going to steal all that premium. I'm going to set alarms on this 535 put. I want to know when this thing hits exactly $5.60 right here. And if it hits 662 for one person, Rick Goley, I'm just going to give you those prices because they're important. Now, when we look at a gap up open list, as they gap up open this stock, they take all the premium out of this market to a wholesale entry. Last week, we did the 535 and the 540s on last Friday. We got those live videos there. The put side was just screaming. Yesterday, the put side did originally go from one number and bounced about $4 during the directional trade management. But then again, when the equity set up and we have all those live trades, we have been able to get the call side and they broke out higher. And we took profits. And understanding pre-market gaps is how they're going to steal this print to the very lowest wholesale price, so that when Google does hit its reversal opening bell morning, whether it's in the first hour, half hour, 15 minutes, it doesn't matter, then this side of the market will be putting in the bottom. And if we break through key levels to the upside in Google, then we will remove the 535 put, and we will focus on the 540 put and 535. It will change. This is the pre-market trade management today, MMTs, and let's have a wonderful Wednesday. And price action exhaustion is what we're looking for. Let it rumble 20 minutes to the opening bell. Nasdaq comp, gap open up, gap open down, diminishing patterns. What do they mean, and what kind of significance and what kind of role are they going to play in that opening bell? Price action, entry, exit, stop management, and everything that it takes to get weighted to the price action.